Good day. Ira Epstein of Linn & Associates with your SPDR ETF video, and this is for the market close of Wednesday, November 4th, 2020. Well, what an interesting day. Now, you've got to remember, you're going to have some gaps on your SPDR and ETF charts because of the election results that in the futures market, and I'm talking specifically to DIA, SPY, QQQ, IWM, that you don't get in the other markets. Why is that? It's because futures trade 23 hours a day, and these markets close typically, 3 o'clock, then they reopen at 8:30 in the morning, so you got a big gap. Gaps often get filled, but got to keep that in the back of your mind. The futures don't have the gaps. I like when they both have gaps, then I have a higher reliability. I take it, and this is my take now on the election, we're going to have a Biden presidency. President Trump will go to the courts and try to get as much as he can get done, but I think in the end he will lose. I think that the Democrat-controlled House stays just as it is, and the Senate stays in the red. That will be the control of the Republicans. We're swapping. We're going to make, instead of the House being the area that gave the president all the trouble, the Senate will be the area that gives President Biden all the trouble. That's the swap. It is the balance of power, but that's a good thing in American politics. If you go back in history, it benefits our society to have a balanced Congress. Now, as for the president, well, I'll let you choose which one you think is right, blah, blah, blah. That's up to you. But without a Congress behind them, as we saw in 4 years of President Trump, it can be a rough road to hoe. A lot of executive orders, a lot of undoing of some orders, but new policies, not quite there. Another thing, all the spending that the blue wave was talking about, so long, that isn't happening. Tax changes that were going to come on to corporations and so on, so long, it's never going to get through the Senate. Healthcare probably gets resolved. The reinflation trade, it's questionable. How much inflation will we see a Republican-controlled Senate go through? Under a Republican president, he couldn't get him to get to the next COVID package that Nancy Pelosi wanted, her number. Now I think the Democrats would take that number in a heartbeat because they're not getting much beyond it now that we have 4 years of this type of Senate, a red Senate. So as I look at the markets, I can see the gap right here. I see an island that's possible. I guess you could say that. I don't know. I have to look and see how that matches with that. But that is a gap. What did this do to the trend? It broke it. You now have a lower low and a higher high. Let's step back to yesterday. This is how the market looked, and you can't argue, it's impossible, that you've got lower highs, lower lows under a swing line. That's bearish. If you take out 114.68, you break that pattern. This is what you did right across the SPDR ETFs. You broke patterns today. Breaking patterns rarely goes from a bear to a bull. You get your pop, the people that didn't get out in time, whatever the reason, they chase the market to come out. That's what I'm viewing. When we take a look at where you went, the 18-day average is what I call the line in the sand. When the market is rallying and breaks, it often goes there and pauses. When it breaks to rally, it often goes there to pauses. That's why I call it the line in the sand. So this market has to make its mind up from there. In terms of Bollinger Bands, you're far away from them. The combination that I had talked about here, that I thought the long-term traders were buying the 100-day average, those people, their candles work, they lit them. Now they're going to be looking ultimately, I think, to see can they get up to the upper Bollinger Band, the longer play. What I do think will come into play this year is the Santa Claus rally, the ho-ho-ho-ho rally. Why? What's to stop it? That's what I'm thinking. There's nothing that I can see to stop it. We know we're going to get hit with COVID right now. It's going to get worse and worse because we're 2 weeks behind Europe. They have been getting hit. Brussels was a little better today, but other areas of Europe are still very much under the pressure, and they've been that way. We're just catching up to them. So by the time that runs its course, my guess is we'll be into early December. I'm just giving a guess with the time frames. And the market will say, okay, we can do certain things. In addition, we'll be looking at out of a lame duck Congress, and that's what I think we'll have, no passage of anything, passage of bills for January going forward. It'll be the COVID relief, it could be some infrastructure, we don't know. There's going to be a lot of talk to see. It'll be restrained, in my opinion. That's how I'm viewing it. I'm not going to come back and do all that. We're going to just keep talking chart action. But I think today was so important to mention that whether I'm right or wrong, you've broken the downtrends that were in place. Momentum is turned up. Battleground's right here. SMH, lower low, higher high. You broke the downtrend. You broke the downtrend in this market yesterday. Momentum had turned up. The goal was to get back to the 18-day average, and you did that. That's what I was looking for. The XLI, the market is fighting a battle. This isn't as bullish as the other markets. You still have lower highs, lower lows. The settlement at 79.39 is under the 18-day average. So the pros that decided to go into report short, if they did, right at the 18-day average, are still looking at the 81.53 level, but this was formidable support, the 100-day in the lower Bollinger Band. I, as a pro, and I think I am a pro, I like to be sidelined during big reports and then take another look at the market. On the energy sector, if you can take out 30.22, you're bullish at that point looking for the upper number here. If you're going to fail in this market, because it's today's action was an outside day, you take out today's low of 28.77, I think you're going to the lower Bollinger Band. So what I think the pros will do is they'll have stops over that 30.22 level, seeing if they can get up there, given that OPEC is sending out all kinds of messages that they don't want to continue with the idea of putting more oil on the market right away. I think they can put that back. Don't get all caught up with the API and the EIA numbers of about an 8 million barrel draw as being a trend. That was still a hurricane. The last one that came through into Louisiana and those areas. Don't forget that. So that's what that is. In the QQQ, you ended a downtrend. This is how you looked coming in. If you take out 279.49, you break this whole pattern. What did the market go to? The 100-day average and the lower Bollinger Band. What was I saying? That's a pretty big important area, and that's where I think the pros are coming out. And now the question is, can the market go? Under this new idea, I could be wrong, maybe the president wins, but whether he wins the election, Trump, or it's Biden, the FANG stocks aren't going to be that impacted. They would have been under a blue sweep. That, they had absolutely made it clear, the Democrats, what they wanted to do. This was the all clear signal for that trade. So the growth trade gets hit. You saw Caterpillar today, and you see what this market is doing. Emerging markets, they said, I'm back. We're up to 65.07. We're out of the downtrend. But my friends, the first challenge that I kept telling you, these 200-day averages are where the boys that wanted to be in this type of trade were buying anyways. And as a bear in the market, which I was, this was the cover, all cover zone. It's a pretty big combination. It really began right up here. Now the market has gone to the upside. When we come to GLD, in order to be bullish, and I'm not yet, you've got to take out 179.39 2 days ago, yesterday's high. If you can do that, then I don't want to see the market under today's low of 177.66. I'll look for 180.99. We have a sideways pipe. Remember that word? We haven't had one of these in a while. It's still here. And this is either going to turn to be a heck of a base to move away from, or if you start breaking through 174.83, you're looking at a market that is saying, no, that we're not getting that inflation type of trade. We'll see which one it does. In the gold miners, this is bearish action still. Lower highs, lower lows. You rallied up yesterday to the 18 and the 100-day average in a market with lower highs and lower lows. So if you were bearish, that's where the bears were probably hitting it. If you can clear 39.63, I think the bulls will buy that at 39.64. Straight stop either under today's low or the lower of tomorrow, if you can get over there, looking for wherever the Bollinger Band is. But the first thing they're doing is selling into rallies all through this. Keep that in the back of your mind. TLT, well, the idea that we're going to just spend, I can go on and on like a broken record, with a control in the Senate isn't going to happen. You saw you got no COVID. Can you imagine what you're going to get on infrastructure and all that? It's going to be much more restrained. The market popped all the way back. You should have seen the move. $5,000 move in futures from low to high. Dramatic. FXE. Down, but now holding the 100-day average. This was the cover area, in my opinion. Now the market's trying to figure out what next. You need to close over 110.60 to be bullish. Barring that, you're still very much in the bear trend. You negate the bear trend if you take out yesterday's high of 110.41, do that and close over 110.60, and I'd have reason to be saying, okay, the market's reestablished an uptrend. Maybe it's going to challenge the upper Bollinger Band. If you haven't done that, that's the make-believe. I cover for you so much data in my afternoon Spider ETF. Now, today I put out 2 of them. When I get a big report, I've decided, like an election, I'm going to put out for you a morning report in addition to my afternoon. On the weekends, every Saturday, I'm putting out weekly reports. That's included in my subscription, only weekend charts. So I'm looking at the weekly charts, not weekend, but weekly charts. During the week, I'm looking at the daily. I'm covering all this for you. It's a heck of a lot. To get started, I do charge. I'm not going to give it for free. You don't go to your doctor and he says, oh, I'm going to take care of you for free. $8.95 for the first 30 days. That's 5 days of charts, Monday through Friday. And on the weekend, on Saturday, you're going to get a weekly chart, just the weekly charts by themselves. After that, you can either stay with it, decide, hey, this isn't for me, but think about it. What's the cost of that? Out of 30 days, you're getting the equivalent of 26 days of charts. It's not very much money each day. Take a look. How do you get it? Go to our website under the word research. It's all there for you. Or call my staff. They'll get you set up in 2 minutes. I'm Ira Epstein. You have a great day. I'll see you tomorrow.